Hello, traders. It's Sunday, May 11th, and the theme today is bad news. Uh-oh, what's happening? Is the market going down? Is the market going up? Why is this bad news? Hey, I don't care if the market goes up. I don't care if the market goes down, as long as it does so with conviction. What I don't like is when the market sits still, and that's the bad news. I believe we're going to continue to see these conditions for at least a couple of weeks. Going to get into that in just a second, but what we've been looking for is this resistance level to hold. You can see 200-day moving average, horizontal resistance, 100-day moving average. We want the market to sit right here and not be able to advance when we have good news. And so far, that's what's playing out. So we did not want to start taking short positions on swing trades yet. We're still waiting for that evidence for all of this to play out, and Apple was a classic example. Is Apple lower than where I showed you a week ago Sunday? Yes. Should you have been shorting Apple? Not on a swing basis. You could have found some decent day trades in there, but the stock is doing exactly what I want it to do. When the market's up, the stock is flat. When the market's down, the stock is down. So I love that. So even with this little upside push here for the market, what has Apple done? It stayed below AVWAP-E and it can't get off the deck. That tells me that the selling pressure is there. We simply have to wait for the market to roll over. And when it does, Apple's going to be a great pick for us. So what do we do with this information? You can start setting some alerts. I'll click here, I'll click here. That's a small upward sloping trend line. That'll work out. It'll keep rising and rising with the passage of time. So yeah, just set an alert and wait for it. When the market does finally roll over, Apple will trigger an alert. I'll take a look at it. Yup, it's still relatively weak. I like the short. That's how I'm going to be playing it. But for right now, you should not be trading very much at all because the market's not giving us anything. So we get all this big news. We got mega cap tech earnings that came out. We had major economic releases, GDP, jobs report. We even had the FOMC statement last week. Hallelujah. One of these pieces of information is bound to get the market to move higher or lower. Right? Nothing. Absolutely nothing. You can see these tiny little bodied candles, almost dojis. So wherever the market opens, that's pretty much been where the market closes. There's absolutely no momentum here, and look at the trading volume dry up. I wish I had better news for you, but I don't, because I'm looking at the calendar ahead. And what we've got scheduled for economic releases is we have CPI and PPI coming out this week. They're not a big deal. Yes, they had been a big deal a year ago, but now they really are not that important because inflation has gradually been coming in. We're not seeing any big fluctuations in it right now, so I don't think the numbers are going to generate a big market response either way. So we've also got Empire Manufacturing and Philly Fed. No big deal there either. Yes, I'll be watching the numbers and I'll be watching for signs of softness, but the numbers themselves shouldn't have a gigantic market impact. Then as we get to the next week, that week, now we're all of a sudden going into pre-holiday mode. We've got Memorial Weekend coming up. So you start seeing trading volumes taper off Thursday and Friday that week. Well, I looked at the scheduled news releases and there's not a lot to sink our teeth into. Flash PMIs, retail sales, that's about it. There's nothing major that's going to drive the market. Well, how about earnings? Now, earnings season is really winding down right now, so we don't have a lot of major earnings releases left. So I don't see much happening over the course of the next 2 weeks, unfortunately. So I think that we're going to continue in this malaise here, and the market's going to try and get above the 200-day moving average. It's going to struggle to do so. It's going to struggle to get to the 100-day moving average. While it does that, I will be looking for sluggish upward price movement when we're getting good news. Well, what the heck could that good news be? It could be related to the budget that Republicans are going to try and pass. It could be related to the tax cuts that are within that budget bill. It could be trade deals that are coming out. We're going to hear more and more trade deals coming out. And what I'd like to see is, oh, hey, there's a big trade deal. Initial rally by the market, and then the market sinks lower. There's another trade deal. Hey, the market rallies up, and then the market gradually pulls back. That is the kind of resistance I want to see at these levels. Wham, 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 whack-a-mole with all those little sugar high rallies. If I start to see that, I'll know that sellers are getting more aggressive and that the bid is starting to weaken, that the market can't get through these major resistance levels. This was a big drop, and it's because of global macroeconomic conditions. They are deteriorating. Okay, we have hardly any growth in some of the most developed countries in the world. That's going to be a problem. We're going to have less container ships coming into our ports. People are going to read about that, and they're going to start getting more pessimistic. So I'm just in a wait and see mode right now. Good news comes out. I want to see the market hammered back down. That tells me resistance is in place. That tells me that sellers are getting a little bit more aggressive. And that tells me that I'm getting closer and closer to this bounce running its course and the market rolling over. And so what will I be doing? Yes, I've taken a couple of small bearish swing positions in here. I know that I'm going to have to weather a storm or two on the upside, but that's okay because once I have that confirmation, that resistance, I might even start adding a little bit to those positions, but I'm going way out in time. If I'm buying options that span the next earnings announcement. I'm going out into September. I'm not going to fart around with short-term positions because between now and let's say October, I believe the market is going to have a substantial pullback. That's it. That's all I'm positioning for. I don't know when it's going to happen. I don't know what the news is. It's going to actually cause the market to roll over. And I know that I'm going to have to weather a little bit of upside in here. So I'm not going to get aggressive with anything. That's kind of where you should be at right now. When it comes to day trading, you have to be super selective because you can see that every single one of these days, let's go into a 15-minute chart and let's just take a look at what the price action has been during the course of the day. So generally, you get this big drop and instantly you bounce off of the low. Okay, you can kind of get behind this move right in here and you can day trade from the long side. You get another big drop like this and you're starting to move into the gap. You've got a little bit of an opportunity to try some longs on the day trading side here. This day, you got nothing. You're just moving back and forth, and there's really not a lot of momentum either way, but we've got long candles in both directions. So there wasn't a lot to really latch onto, and that was actually the FOMC statement. So here you've got a gap up, market pulls back, and you've got a big rally. This was all tariff related, which this is kind of a tell to me too. So you've got the news that US and UK are going to do a trade deal. You get this initial gap up and a little bit of a pullback. And then Trump gives his press conference and you get this nice rally. But look what happened after that press conference. The market gave back almost all the gains from that UK trade deal. That's the kind of thing I'm looking for. That is confirmation. And it's not like, wham, there's the ultimate confirmation. It's going to be confirmation over a multitude of news events and stories. It's just the resistance continues to build and confirm itself. As I start to see that lid form on the market, well, then I'm going to be a little bit more confident that no matter what trade deal comes out in the next month or two, that there is downward pressure on the market. There is resistance, and that macro global economic backdrop is what's weighing on the market. That's what I'm looking for right now. So when you are evaluating the market, you've got one of two scenarios that plays out most days. You have to watch the first move. You really can't trade that first move because you don't know if the first move is going to be legitimate or if it's going to reverse. So you watch for a wimpy first move, and if you get mixed overlapping candles on light volume, when that move runs its course, doesn't matter which direction it is, higher or lower, when that first move runs its course, then you're already looking to trade that reversal, and you're looking at the opposite side because that's where you're going to have at least some opportunity. It may not last more than an hour or two, but the market's going to stay within its trading range. That's what it's been doing. It's been closing very close to its opening price. We're going to use that information. We're going to use that context, and that's how we're going to structure our day trades. There will be occasions when you do get a directional movement like this day where you had the gap down and you instantly go into the gap with some nice, decent candles. All right, when you get that situation and the first move of the day is legitimate, then you know that you still have an opportunity to trade in that direction, perhaps for an hour or two, but don't overstay your welcome. So my suggestion to you, keep your swing trades to a minimum. Look for opportunities to perhaps take some bearish swing positions in the next week or two, some longer term bearish swing positions. Make sure that the stock is very resistant. It does not want to move higher when the market moves higher. Those will be your best candidates, but you really shouldn't be building any positions right now. Day trading, stay flexible, watch that first move. Sometimes you're going to be trading reversals. Most of the time, you're going to be trading reversals because the market's not going to have a lot of impetus in one direction or the other unless you have a big gap down like we did in this case. The market opens flat, then you're almost always going to have a wimpy first move and a reversal, and then you finish somewhere near the close. So that's how you should be trading it. I'm going to give you a long, and I'm going to give you a short. Day trade, and day trade exactly like I just explained. So I'm going to look at these stocks in general on Wednesday. On Wednesday, perhaps a week from now on Sunday, and we'll take a look at them and we'll see how they played out. But you shouldn't be taking big positions right now. This is a low probability trading environment. So what I'm going to do is I'm going to go into my bearish SMA cross search and AFRM. That is going to be a short that I'm going to highlight for day trading. I like this stock because it just announced earnings, and look what happened. Stock was compressing above the 200-day moving average before earnings. Okay, that's nice. Earnings come out. So this is after the close. On Friday, this was the reaction to that earnings announcement. So the 200-day moving average, the 100-day moving average have both been breached. Actually, this was a rejection off of the 100-day moving average pre-earnings. And then after the earnings announcement, the 200-day and the 50-day moving average both failed. And you'll notice back in here, the purple line is below the black line. That's a death cross. All right. I've got a number of factors coming into play now. By the way, a firm did lower their guidance for the next quarter, and the company doesn't really make any money. Maybe they make 2 cents per share per quarter, lost a cent per share. So they're not really a very profitable company at this stage. I like what I see here. Higher interest rates are not going to be good for the company either because this is a form of buy now, pay later. That's what the company does. So I like this. I think that the stock showed its true colors on Friday. And if we go into the 5-minute chart, you'll be able to see a nice gap down and a close near its low of the day. This is nice steady selling pressure on heavy volume. I can't recall where I saw the long that I'm going to give you, but I do have a small position in it, and it is Tesla. I like Tesla. I like the fact that it's been able to get through this horizontal resistance level here. I like the fact that it's above AVWAP-E. I like the fact that it's challenging this horizontal trend line and that it closed above that 200-day moving average. And on a 5-minute basis, I really like that the stock moved higher Friday on heavy volume. And right now, when you're trying to find your trades, heavy volume is such an important component. It's absolutely critical. Without heavy volume, you know that the market's not giving you anything to look at with the garbage price action that we've seen there. The stock has to have heavy volume. That is your only chance of finding a sustained directional move in this low probability trading environment. So when you are searching for stocks to trade, it must have heavy volume. If it doesn't have that, every beautiful little pattern that starts forming is going to fall apart because there's no conviction to it. It's just programs driving the stock around that make it look really, really good. They're trying to lure you in. Oh, you lured in, and then the bottom falls out. You've got to have heavy volume. You've got to have that institutional involvement. If you have it, then the price action is going to be legitimate and it's going to be much easier for you to predict. So especially with this market backdrop, you've got to have that volume. So what do I want to see out of Tesla? Same thing that I'd want to see out of any long that I'm trading. I want to see relative strength compared to the market. And you can see how it's just starting to gain its relative strength in here because it's just poking above the zero line. So I want to see relative strength. I want to see heavy volume, and I want to see a nice technical breakout. And the stock still has room to run up to that 100-day moving average. I am only day trading it. And ideally, I'll be day trading it when the market gives me a wimpy, crappy little first move of the day with mixed overlapping candles and it finds support. During that little wimpy, crappy move lower, what's Tesla doing? It's holding its own or it's inching its way higher and the volume is still good. Awesome. When that first wimpy move of the day to the downside finds support, Tesla will be what I'm looking for on the upside, provided that it's showing me some good price action. Exactly the flip side of that coin, if the market comes out and it has a wimpy first move to the upside and it opens very near the previous close, that is a flat open. We're not going to do much today. So you get this wimpy little crappy move to the upside to start the day. I want to see AFRM not able to participate in that rally and perhaps even drifting lower. As soon as that little wimpy market rally is done, it's going to roll over and test the downside and AFRM is going to drop. And that's how you've got to be trading right now. So enough said. I think you get the point. Please make sure that you're watching my short videos. I'm doing them a couple times a day. I'm trying to do one once I get my market bearings about an hour to 2 hours after the open. I'll try and highlight a day trade, and then I'll do one at the close just to show you what pattern played out, how I would have been playing it, and then that'll give you a feel for what you should be doing right now. So please watch those videos, subscribe to the YouTube channel, turn on your notifications. You'll never miss any one of those. And that way, you'll be able to get some good picks during a lackluster environment. Thanks so much for watching. We will see you soon.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.